The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, happy Tuesday, everybody, here on the Small Cap Roundup. It feels like I've been away a long time since Thursday's show, but it's only been a few days, and I was thinking about that. Why does it feel like such a long time? And I think the reason is because the market has gone into an uptrend since then. So, quite a different feel about it out there. Although, who knows what can happen? We're still in that very fragile time frame within the first few days after the NASDAQ on Friday. What happened was it was up about 1.3%. Volume was heavy, so we do have a new uptrend right now. And there had been some encouraging technical signs in the indices prior to that. So really, Friday's upside gain came on the heels of some other strong market action. There were some signs in the indexes that it was perhaps sentiment was perhaps changing, and I think everybody really expected some kind of major jubilee in the markets on Monday after that Greek election, the result where the less left-wing party, apparently, I don't know too much about Greek politics, I just follow what I'm seeing here in the news, but apparently the guy that the markets wanted to win did win. But the reaction was more muted than I believe many market commentators and analysts had expected. That's okay. That's okay. Well, it's go with what we see, not with what we expect. Got some solid gains on the indexes today. And I wanted to start out. We've got a great show today. I'm very excited. We have as our guest, we have coming up in the second half of the show, Eric Marshall, who is a small cap fund manager at the Hodges Fund. They're a terrific shop. I've interviewed Craig Hodges in the past. I've interviewed Eric in the past, both of whom for Money Show. Eric is just a excellent small cap investor, small cap analyst, and he'll give us his perspective on what he's looking at in the markets these days. And as you know, one of the things that I enjoy hearing about from the small cap managers is how they look at their fundamental metrics, because they look at them in quite a different way than I do, than most traders do. I definitely do use earnings growth and sales growth as part of my screening methodology. Occasionally I will look at some cash flow per share or return on equity, but the primary metrics I look at are the sales and earnings growth, and that's important. That is what the institutional investors are looking at as well, is the earnings growth, and they prefer to see it driven by revenue. And as we've had a number of the small cap managers have talked to us about, as they've been guests on this show, it's much more common to see these smaller cap companies have their earnings driven by revenue increases because, frankly, they didn't have all the corporate fat to cut the way some of these bigger companies do. The euphemism of cost cuts, what that really means is job cuts. It doesn't mean fewer paper clips. It means job cuts, and the smaller companies normally do operate on a more lean and mean basis. So they are in the position of having to grow earnings based on revenue. And we see that over and over again when I run my screens, and we'll look at a couple of those today. That's what I see in the stocks that do show up. So let's see here. There we go. I think we're okay there on Tiger TV. I hope Al will let me know if we're not. I put a chart up there of the IWM, the Russell 2000. I like to start out with that. And you see right up here in the last few sessions, this is kind of what I was talking about. We did see some encouraging signs So we're looking at some nice gains Tuesday. We had upside trade Monday, Friday, Thursday. Let's see here. Earlier in the week. So we were getting some nice support here on the IWM along the 50-day, I'm sorry, the 200-day line. It's today. It's regaining its 50-day line is what I meant to say there. Regaining its 50-day line today. You had support along the 200-day. So you did have some encouraging signs prior to Friday when the NASDAQ did post some nice gains, and that is continuing. Normally, these new market rallies don't just come out of nowhere. You do typically have a precursor in terms of some technical action that does bode well for stocks, and that was indeed the case right here. So what I wanted to do today is I wanted to just take a look at, I wanted to read you an article here, very short article. It's actually not even an article. It's just a bunch of bullet points. And it's from my friend Steve Burns. And as many of you know, I write for moneyshow.com. If you go over to moneyshow.com today, you will see in the Daily Guru section is an interview I did with Steve. And Steve and I have talked before. We communicate quite frequently. He is a terrific trader in very much the same style that I use. He's been influenced by Alexander Elder, Michael Covell, trend following. Also, of course, Bill O'Neill, one of my major influences. So Steve is an author. Also, if you go over to Amazon, you'll find some of his books. They are very inexpensively priced. He wants to make them available to people. Some terrific trading advice to add to your library. So in any case, I get nothing from that. I just think that Steve is a great trader, and his thoughts are worth sharing out there. So I just want to make you aware that there is some terrific information that he's made available to people. Let me read you a list that he published on his blog yesterday or today. 13 things successful traders do differently. 1, they pursue realistic goals as their returns. Well, that's a great one right there. 2, they take decisive and immediate action when their buy or sell signal is hit. Yes, yes, yes. This is where you want to just get out of that hope zone. Stick to your stop losses, or stick to your price targets if you are using them. Those can be adapted. Now, I'm commenting on Steve's bullet points here. Those can be adapted, but in some cases, when you do see those and they're not in a situation where they need to be adapted any further, take action. Don't say, okay, I need to change it further. Not on the fly. You don't change it further on the fly. You change it further when you're analyzing your buys and sells and looking at the end of each trading day where your stocks are. Number 3, they focus on winning trades, not quantity of trades. Yeah, thank you. 4, they make logical, informed trading decisions with their system based on the probabilities. There you go, keeping the emotion out of it. That's kind of related to number 2. Number 5, they avoid the trap of trying to make perfect trades and instead focus on being profitable in the long term. Well, that's absolutely right. I think there's a lot of information out there in the tradosphere, and it gets very competitive, and people wanting to be perfect traders, and that's just not realistic. And you hear a lot of these guys talking about their systems with a 97% accuracy rate on their trades, a 97% win rate. Come on. That's just unrealistic. Number 6, they trade the right position size that is within their comfort zone. There you go. Number 7, they keep things simple and focus on winning trades, not complexity in their trading. And if you've listened to this show, you know that's a big point with me as well. Using simple indicators, just moving averages. And when I mean simple, I also do use exponential moving averages, so I didn't mean that literally in that sense, but I do mean literally, and Steve does too, I know. Moving averages, price, volume, occasionally maybe I'll use some MACD, but there are just a lot of indicators you can overlay on your trading and make it much worse. It can lead to analysis paralysis. This is something that I referenced Bill O'Neill a few minutes ago, my former boss for many years. That was one thing that he talked about frequently, was that people would overlay way too many oscillators and indicators, thinking that it was more sophisticated, or maybe thinking that would give them more certainty, and it leads to the opposite. Okay. Number 8, they focus on learning and making small, continuous improvements in their trading and their system. Well, absolutely, and that's the point of listening to TFNN and reading different stock trading materials, options trading materials, futures, just learning. In fact, Steve is a great example of this, and I like to follow his example. He has been an equities trader for many years and has recently turned to options and just wrote a book about options. I think that kind of expansion of one's skills and knowledge base is always terrific. They measure, number 9, they measure and track their progress with a trading journal. Yep. Number 10, they maintain a positive outlook as they learn from their mistakes and focus on trading with discipline. Yeah, that's not always easy, is it? to avoid getting discouraged at times, but that's very, very important. Number 11, they spend time learning from the right traders. Well, that's right. That's kind of what I was alluding to a few minutes ago, about ignoring the people who claim some kind of 97% success rate with their software, and really paying attention to the ones who have learned the hard way and developed some trading rules that do work. Number 12, they maintain balance in their life by spending time with family and friends and not trading 24/7. I'll tell you, a great example, I believe, in this regard is Tom O'Brien. I think he seems to really enjoy life, spend time with his family and friends, and is not obsessing about this stuff 24/7. We all have a lot to learn from him and from Steve Rhodes as well. TFNN is a terrific place, in my opinion, to have some great examples exactly of that. Number 13, they love what they do. Even if sometimes that means spending time in a losing streak, their passion keeps them going through the rough times. I think that's related to the idea of maintaining a positive outlook. I was listening to a podcast from a fellow that I met at the Traders Expo in Dallas, a guy named Merlin Rothfeld. And Merlin was making a good point. He said that if he has, I actually can't remember the numbers right now, if he has 2 losing days in a row, he takes 3 days off, or if he has 3 losing days in a row, he takes 2 days off. I can't remember what it is, but it doesn't really matter. The point is, he takes a breather. He doesn't want to let himself get discouraged or get into that situation where you feel like you need to double down and get your money back. He just takes a breather. And of course, Merlin does also incorporate stop losses and some very disciplined trading methodologies. Okay, that's it for this segment. I'm Kate Stalter. This is the Small Cap Roundup. Check out the homepage of TFNN.com for some information about the Low Price Leaders newsletter. I'll talk about that a little bit more right after this break coming up, and stick around. We've got Eric Marshall in the second half of the show. Be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, welcome back to this segment. We're just a few minutes away here from the always exciting European close. In the meantime, just wanted to follow up on something I was talking about before the break on the homepage of TFNN.com. And if you were listening to the commercial there during the break, you heard the message about the Low Price Leaders newsletter. With the market in a new uptrend now, this is the perfect opportunity to be taking a look at that. We actually made a trade in there this morning of one of the lower price names. So if you want to take a look at what the latest buy in there is right now. And this strategy is one on the long side that will tend to work nicely in a market uptrend. If we have a confirmed downtrend, obviously there are ways to capitalize on those trends too. In the sideways trending market recently, was able to capture some small gains on both the upside and the downside, but some of these big price wins do tend to occur using this strategy in a market that is confirmed in one direction or the other. So, as I mentioned, there is a new trade. Check out TFNN.com for information about the Low Price Leaders newsletter. Now, in addition to stocks priced between $5 and $12, and I should make that clear, I'm not looking at penny stocks. We're looking at stocks that are priced between $5 and $12. And these are some of the ones that can tend to be some of the best performing names because they can gather up some momentum and move up into that $16 range. We've seen that quite frequently. So great place to get in there. I also look at small cap names, market cap below $2 billion. So let me show you one. I'm going to put a chart up there. RTLX is the ticker I want to take a look at right now. So this one is an Israeli company that makes a very specialized kind of software. It allows gas stations and convenience stores to manage their inventory. Small company, market cap of only $504 million. Thin trade, very thin trade. Only 4,600 shares moved a day on average. It's had some decent upside momentum recently, though, and I like the chart action right now, where it pulled back here, then pulled back, got support at that 50-day line, and is in a nice buy range at this exact moment, hovering beneath resistance over there, where I'm indicating over there on Tiger TV at about $20.89. So actually, no, the resistance would have been at around $20.97. Would have been that upside resistance, and it's right now at about $20.59. So in very nice buy range at the moment. Just use extra caution with these very, very thin names. That's one of the reasons why some of these stocks don't necessarily appear on my screens, because I usually do prefer a bit more liquidity, but I do like the chart on this one. Expected to grow earnings to 83 cents a share this year, and then up 37% in 2013 to $1.14. Now, this reported earnings on May 9th. On May 23rd, Oppenheimer upgraded the stock, and as I say frequently, those institutional upgrades are really for other institutions, not for us, but it can often result in some kind of temporary upside trade when it's an upgrade, or downside trade when it's a downgrade, of course, and those are frequently short-lived. So some potentially bullish chart patterns right here. Let me show you another one that I wanted to talk about, another small cap name that I was looking at this morning, because what I did, I should tell you what I'm doing here, I forgot to mention this. I looked at some techs this morning. I ran a screen of some small cap techs in honor of the Microsoft Surface announcement. And who knows what's going to happen in that particular case. Already the analysts are out there saying, well, it's not going to be any competition for the iPad. But Microsoft did get a little price boost. We'll take a look at that maybe a little later on, because I want to show you ACOM right now, not Dow components. I want to show you some of these small caps. So this is Ancestry.com. It's got a high beta stock. It's hitting some intermediate resistance right in here. If I pull this back to a weekly chart, you'll see it's still pretty far below its 52-week high. But the 5-day trend on this looks pretty good. By moving average analysis, it could be a little bit late on this, but using resistance levels, which is another metric that I use, it's squarely in the buy zone. So we can talk about this a little bit after Eric Marshall joins us. I will be right back after this. I'm Kate Stalter. This is the Small Cap Roundup.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter, you get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, we're back, and as promised, the European markets did just close in the last few minutes, and we have the U.S. indexes pretty much hanging in there, maybe just off fractionally since then, but some higher closes overseas. Okay, as I mentioned before the break, I am pleased to be joined today by Eric Marshall, who is Director of Research for the Hodges Fund and co-manager of the Hodges Small Cap Fund. And Eric, for people who are playing along at home, the ticker there is HDPSX. Is that right?
That's correct.
Okay, well, great to have you here today.
Oh, it's great to be with you.
Yeah, we've got an interesting time in the markets right now. Plenty of worries about Europe, but now we have the markets trending higher. I look at the market as like this junkie that's addicted to the Fed's crack, but that's kind of another story. You know, what always impresses me when I talk to fund managers like you is how you are seeking out the fundamentally stronger names, and you're willing to sit through some corrections and be patient until that uptrend starts again. So maybe you can just kind of start out today, Eric. Tell us about what factors you're looking for in the small cap stock selection, and then I'd like to get to some names or sectors that you like right now.
Right, that's a very good point. And then the Hodges Small Cap Fund, you know, all of this recent volatility is a risk for somebody trying to time the market and jump in and out of stocks. However, this volatility can really be an opportunity if you're a long-term investor and able to take advantage of some of the mispricing that occurs in the market. And we've certainly found opportunities out there to do that. We've had somewhat of a stealth rally in some of the higher quality small cap stocks. You've seen that now for a couple weeks. Despite all the turbulence and turmoil, you've seen certain areas of the market, certain pockets of transports and industrials, even some of the smaller regional banks, actually go up and hit new highs and hold up relatively well, even over the past couple weeks when we've had some of the down days in the market. So there is opportunities out there. I think in the small cap space, you have an opportunity to find things that are more domestically focused, companies that aren't necessarily sensitive to what happens with Spanish bond yields overnight or the Greek elections or whatever. Mm-hmm. These are companies with real businesses. And what we do is at the Hodges Small Cap Fund, we really focus on what's going on with the underlying business, and we think of ourselves as almost private equity investors in public markets. So we go in, we spend time, we study the business model, we look for companies that have high barriers to entry, companies that have good pricing power, innovative products and services, and can do well regardless of some of the macro headwinds out there.
When you are looking at some of the fundamental factors that you're screening for, what's most important to you? Imagining that it's earnings growth, tell me what it is you look at.
We spend time really looking at the quality and the caliber of the management of the company, corporate governance, and those types of things. Mm-hmm. Leadership is very important in small cap stocks. But beyond that, we're really looking for companies that are earning a return above their cost of capital. We tend to look for companies that have good balance sheets that are able to self-fund themselves. We try to avoid businesses that are constantly depending on going back to the capital markets to either borrow money or issue equity. So we want to find businesses that are healthy enough to generate cash flows, that either they're paying those cash flows back to the shareholders in dividends or buybacks, or they're able to reinvest those proceeds back into the business at a higher rate of return.
Mm-hmm. It's interesting. As you're saying that, what occurred to me, Eric, was I think when people hear small cap, and maybe you run into this as well, they get nervous. They think you're talking about something that is necessarily thinly traded or even a penny stock or something that carries extra risk. And what I'm hearing you saying is you're really looking to eliminate all those risk factors.
Well, yeah, I think it's all relevant. Over time, small cap companies, because of their size, they offer greater growth potential. They mm-hmm. do tend to be more volatile, but I think in the small cap world it's important to not confuse volatility with underlying long-term risk. And in the small cap space, you can find high-quality companies that are sitting with a lot of cash and no debt. One of the best performing stocks in our fund so far this year has been Cirrus Logic. CRUS. They make the chips for the Apple iPhone, for the speaker systems and so forth, audio chips, as well as some things for the automotive industry. And they've been able to do very well. Companies sitting with $6 or $7 a share of cash, no debt, and there's all kinds of risk associated with customer concentration and stuff like that in their business. But if you really dug into it and really looked at what's going on in the underlying business, you'd see that there really is a very dynamic growth profile underlying the business, and we see multiple years of growth ahead of it. And over time, small cap stocks tend to outperform larger cap stocks because of that growth opportunity. They do tend to be more volatile as a result, but they also carry with them a higher reward for that volatility.
Mm-hmm. Now, last time we talked, it's been a few months actually since you and I have talked, but I did review some of what we discussed. Tech was not a sector that you were mentioning at that point. I'm not saying you weren't invested in it, I'm sure you were, but it wasn't one that you were really highlighting at that moment. Is this a sector you like more at this juncture? Are there others that you want to mention as well?
I think you could pick your points. Another one we like is OmniVision, OVTI. That's a company that also is in the semiconductor space and has some very unique niche markets similar to Cirrus Logic. But we're finding opportunities across all different industry sectors. There's a few things in the restaurant space that we like with gasoline prices coming down. Consumers now have a little bit more discretionary income. Consumers are likely to be driving more this summer. More recently, we've taken a position in Cracker Barrel, the restaurant. So we're really finding opportunities across a broad cross-section of sectors in the fund.
Anything else in the consumer area, or is it more you mentioned industrials a few moments ago? We like Eagle Materials, EXP. They're positioned to benefit from a recovery in housing. They're one of the a leading provider of gypsum wallboard. This is like sheetrock. And you've seen prices come up in that space. There was a lot of capacity that's left the market. They also are engaged in the cement business, and cement prices have started to come back and recover in many of their markets across the country. And the company's just done a really great job of managing their balance sheet, keeping the company profitable even through some really difficult times. And we think as things start to recover, they're going to be very well positioned there. We also like Group 1 Automotive. They're run a network of new car dealerships, and as new car sales pick up, they're poised to benefit from that. They have quite a few Japanese dealerships, and they're going to be up against very easy comparisons compared to a year ago because of the tsunami and the shortage of cars that we had in the later half of last year. And we see really good things going on in that business. Let's see, as far as consumer, we own Krispy Kreme. Okay.
It's kind of a turnaround situation. The company has gone through a big restructuring led by a new management team, and that's a name that we've been out of for many, many years, and we've gone back and revisited it here in the last couple quarters and gotten back involved with that company again.
Now I'm looking at some of the numbers on Krispy Kreme right now, and that looks like that's expected to be more or less a turnaround. I'm seeing that there is expected to be a bit of an earnings decline in 2013, but then that's expected to grow again in 2014. What's going on at that company? Because that made a big splash at its IPO many years ago and then kind of fizzled.
Yeah, that's a good example of a company that just kind of overran its headlights. And over the last few years, the company has really gone through a transformation led by a new management team. They've shut down a bunch of stores, repositioned the business, got it profitable again, and we think that they're now in a position to start growing again. And part of the dip and ups and downs in earnings has to do with some noise in their tax rate and so forth. But overall, we think that there's a lot of kind of hidden value in a very well-recognized brand, a very good franchise, and we think with the right management team and the right resources, Krispy Kreme can really return a lot of value to shareholders from this $6 area that it's now trading in.
I'm surprised just looking at this, and I'll be honest with you, I'd forgotten about this stock. This had fallen off my screens for several years, and I'm looking at it right now. I'm surprised the market cap is so low.
Yeah, and that's one thing that we do in the Hodges Small Cap Fund. We combine growth opportunities with value type situations, and in companies that we know really well, that we feel like there's a disconnect between what we see out there and what the market's perception is. Sometimes we come across opportunities like a Krispy Kreme. An example of a growth situation would be something like Shoe Carnival. This is a company that operates family shoe stores, kind of like a DSW warehouse, but for the family shoe channel. And they have an opportunity to, double, triple their store base over the next several years. And we think they can do that all through, internal cash flow generation. And that's an example of, where we'll own something very much a value turnaround situation like a Krispy Kreme, but we'll also right next to it own something that has some really dynamic growth characteristics like a Shoe Carnival or a Cirrus Logic or something like that.
Now, let's talk just a little bit about your approach. It sounds to me like you and your colleagues, and I've spoken with Craig before too, and I enjoy interviewing him as well. It sounds like you and your colleagues take more of a bottom-up analysis approach rather than looking too much at the macro. How does that work?
Well, that's a really good, important point. I think in the small cap space, bottoms-up investing is really the best avenue. Because you can get too caught up in the macro side of things and really miss the forest through the trees by doing that. I think like I said, we step back, take a look at what's going on in the underlying business. We size up the management team, we look at the business model, and we really study the business and say, do we want to be owners in this business? And we look at that like we're investing in a business, not we're just investing in a stock. And I think in the small cap space, it allows you to sometimes uncover opportunities that if you were a top-down investor just kind of screening through ideas, running them through a funnel, you would miss a lot of opportunities. And I think when you start from the ground up, you tend to come across ideas much earlier than you would, if you were just waiting for the fundamentals to, rise to the top and for things to become more obvious.
And it seems that some of that approach, just in my experience, some of that involves a lot of prognostication that may or may not actually be borne out. Yeah,
and I think that's an important point. The good analysis, I think, is rewarded more in a bottoms-up approach, especially in the small cap stocks, where you can find things that are less followed by, Wall Street. You just simply have fewer analysts, fewer money managers looking at these companies. So going in and finding out pockets of opportunity, even in a slow growth environment like we're in right now, you can still go out there and really find businesses that, have hidden growth opportunities that can do well in any type of environment. And I think that using a bottom-up approach, that's a much more rewarded.
We have about a minute left here, Eric, so just very briefly, I wanted to follow up on your comment then about the lack of following by the Wall Street analysts. Do the small cap companies tend to go back to the markets for debt or equity financing, either one? I hear people say different things about that.
Well, I think it just depends on each situation. One thing I would say is that the small cap stocks, by and large, generally have more simple capital structures. They have less complexity to them. Usually they don't have multiple operating subsidiaries or financing units and stuff like that. They're usually much more simple capital structures. And, I think you can find most opportunities where a lot of these companies are sitting with the best balance sheets that they've had in over a decade. And in most cases, you can find, if you look in the right places, find companies that can fund their own growth internally. And
there you have it. That's all the time we have today, unfortunately. But that was a great place to end. Well, Eric, thank you so much. Great to talk to you as always, and some terrific insights today. We'll have to have you back.
All right. Thank you very much.
All right. Stick around, everybody. Back with one last segment of today's Small Cap Roundup.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back. Last segment of the show today. Great conversation there with Eric Marshall from the Hodges Fund. I always, as I mentioned earlier, enjoy hearing the perspective from the small cap managers, even though we as individuals can trade differently and we don't need to sit through the same corrections they do. Remember, we don't have most of us, the resources to do these type of detailed fundamental analyses they do, nor the time. It's doable, of course, by individuals. You absolutely can, but most people just don't have the time that these funds with their staffs of analysts have, and we can benefit from their decisions. Several of those names he showed us there during that conversation do have some nice charts, and that is due to the institutional buyers who are screening for these fundamental metrics, looking at the company itself, visiting the company, checking out the corporate governance, the transparency, and then we see the results of that research on the charts from their buying. Okay, wanted to wrap up today. Just a couple more names I had that I wanted to show you from the small cap tech sector in honor of Microsoft and the Surface tablet. So we have ACIW that I've put up there in front of you. And this is, it's ACI Worldwide. It's another one of these payment companies. I talked about RetailX, RTLX, early in the show today. This is an interesting chart on ACIW. I've got it for you there on a weekly, and you can see this consolidation, and then it formed a little bit of a handle area. It doesn't even really look like a cup with handle. It looks more like a saucepan with handle, is how I would categorize that one. This stock is, as of earlier today when I took a look at it, it was in buy range. So probably still in that range at this moment. It was looking to pass a high of 41.99, trading at a little bit over 42 right now. So yes, definitely still in buy range. This is another one of those companies that makes point of sale and ATM transaction software. Online billing is another area they specialize in. Now the transaction category may seem mature, but according to some other small cap managers I speak with, this didn't come up in the conversation with Eric this morning, but many view this as still a growing area. Don't forget, it's not just the U.S. Many of these companies do have a worldwide reach. So that's an area to take a look at. One more. I think I have a little bit of time here to show you today. I just can't believe how fast these shows go by. This is LivePerson. LPSN is the ticker on this one. And this is one of those customer service, online sales and marketing companies. Been around for a while. People mocked it when they first went public, saying, "You're kidding me. You're going to get a live person every time we call up." And their business has evolved beyond that. But this is also a nice chart trending higher. So I want to just take the last minute or so of the show today, remind everybody, if we do remain in some kind of market uptrend, and now I am seeing, just checking the indexes, I am seeing some improved percentages here for the session. Volume has been heavier than normal thus far today. Great time to take a look at the Small Cap Roundup. Don't forget, this is when, or the Low Price Leaders newsletter. Listen to the Small Cap Roundup and check out the Low Price Leaders newsletter, because this is when you have those smaller names very often at the beginning stages of a new market rally will assert themselves as the market leaders. So great time to be taking a look at that on the homepage of TFNN.com. And don't forget, check out my articles on moneyshow.com. I mentioned Steve Burns this morning. There's an interview with him on the Daily Guru that is on the homepage over there today. Check that out as well. I will be back here on Thursday with more small cap and low priced ideas for you. Have a great couple of days until then.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees